Well, here we are with Calum McNeil from Mortgage Money. Got him in on the pod today to give us a chat about what mortgage brokers do in today's market. And our key focus here today is what you would do, Calum, with first home buyer. So, a first home buyer either comes to us first and we refer them to you, or they come straight to you. Give us a bit of an overview of what's involved in the process for you then to go through that financial approval to allow them to go search for a new home.
Yeah, sure. Firstly, thanks for inviting me on.
It's all good.
I'll answer your question now. So yeah, first home buyers, typically, probably around half my clients are first home buyers over the last year. So the environment for them is quite difficult. It can be quite overwhelming Googling how to arrange a mortgage online. So there's a lot of information out there. Some of it's better than others, but yeah, the best first step for a lot of first home buyers is to, even before looking at properties, really is to meet up with a mortgage advisor or a mortgage broker. And a lot of people are interested in how much they can borrow.
Yeah.
So I think a lot of people understand that a mortgage advisor arranges the best or negotiates the best mortgage rates and the best mortgage structure for a client. But what a lot of first home buyers don't, and other buyers don't appreciate, is there's quite a range in how much people can borrow across different banks.
Yeah.
So my job is ultimately to figure out what the first home buyer wants to do and help them along the process to make it easy, remove stress for people, because there's a lot of other information they need to understand.
Yeah.
The legal side of purchasing a property, the arranging a builder's report or registered valuation. So my job is essentially to make the finance condition work, but I'll also point them in the right direction where needed. And so first home buyers, there's some good options out there for them at the moment.
Yep.
A lot of people, they typically assume that you need 20% deposit. That's not the case through some banks who are affiliated with Kangora. You can proceed with as little as 5% deposit.
Okay.
It's good to know.
Yeah. So, things like first home grants, KiwiSaver, withdrawals, that sort of thing, I can point them in the right direction there as well.
And your services are actually free, aren't they?
It is. They are free. So yeah, I'm paid a commission by the lender, which can either be an upfront commission or a trail commission, depending on the lender. Yeah. So that incentivizes me to move quickly and make it work for people. Yeah.
Good statement. Move quickly. The average time for someone to get approved for finance at the moment, we know that the climate at the moment is not as easygoing as what it was going back 18 months ago, 2 years ago.
Yeah.
So say a first home buyer comes to you now, how long does it take for them to get a pre-approval? I realise everyone's different, but on average, how long is it taking for a first home buyer to get approval for them to be able to go and then make an offer on a property?
Yeah, again, sort of depending on the complexity involved, most people from the first phone call, there's typically about a week of gathering documents to submit the loan application. For pre-approval, I'm happy to do pre-approvals if clients want that. I think it's particularly important for first home buyers. So pre-approval is just a piece of paper from the bank that says, we're happy to lend you a certain amount of money for the next 2 or 3 months, depending on the bank.
Yeah.
And that gives you confidence in your purchase price budget.
Yeah.
So it's always a good idea for first home buyers to have that arranged. What can happen is people find a house whilst that's happening, which is fine because we've made a good start on an application.
Yeah. So how long does that traditionally take to get that pre-approval? So it takes about a week to get all the documents ready.
So
then you
didn't answer your question. Fair point. So time frame.
Well, I'm just going to answer it. I'm just going to ask it again.
Time frames vary across lenders, and pre-approvals are not always prioritized. as much as live deals where
Yeah.
there's a property transaction involved. So on average, it can be between 1 and 2 weeks to get an answer,
Right.
depending on the bank.
So a week to do the paperwork with you, on average.
Yeah.
Then another week to 2 weeks from a bank
Yeah.
to approve a certain amount
Yeah.
for them to be able to go and make an offer.
Yeah, absolutely. Yeah.
And that pre-approval can come along with some sort of conditions.
Yeah, I mean, there can be conditions. Typically, I like to give people as much certainty as possible. I found in the last year, if you make it a little bit difficult for people up front with documentation, for example,
Yeah.
you end up getting a better result. So if you've got a pre-approval with, half a dozen conditions, it's
not-
useful, but it's not as useful
It's not
as
as
it
strong,
could.
is it?
Yeah, that's
Yeah.
right.
Yeah,
So
yeah.
I typically counsel people to, try and get as
Tick the boxes first.
Yeah,
Yeah, it's good.
and
And
that removes the stress as well.
Yeah, absolutely.
why is it that working with a broker is generally going to be much better than working with one bank directly?
Yeah, lots of different reasons. We only have 20 minutes or so, but ultimately it's
Give us the main reason.
yeah. The main reason would be brokers have access to
All the lenders,
almost all lenders,
Yep.
almost all main banks in New Zealand.
Mm-hmm.
and you can negotiate.
There is a little bit of negotiation on rates, which is important, but that's just one aspect of it, really.
Yeah.
Like my focus, it's important to get the right rate, particularly in an increasing rate environment we're in at the moment. But ultimately, the immediate need for the client is to buy the property, but you're also wanting to try and understand their medium and long-term goals
Yes.
and their
Yeah.
risk tolerance and form a relationship with someone long-term, so you can help them, buy an investment property in the future, or set them up to set up their structure so it works for them in the medium and long term.
Yeah,
as
because
well.
I think a lot of people don't. I think a lot of people think that they just get a big, massive loan and then they pay it off over 30 years. Whereas what I've learned and worked with you is that we can actually structure the loan where different portions of that loan are coming off fixed rates at different times. So you actually diversify your risk a bit more. Can you talk a wee bit more about
Yeah.
structures around
Yep.
floating? What's a floating
Yeah.
mortgage?
Yeah.
All that sorts of
So
things.
structure is a very important thing to get right. There's a few different considerations in there. So Calum's talking about spreading your interest rate risk. So not your whole mortgage is not coming up at the same time, which it might have been 2 years ago. You could have locked in, a 1 year fix for 2.2%.
Yes.
And it sounds great, but fast forward 2 years, you're moving from 2.2 to 6.5%. Then your whole mortgage is coming up for renewal, and it's quite a big impact on your household budget,
Yes.
which if you've borrowed a lot is a big deal.
Mm.
So it's very difficult to promise anything in advance in terms of interest rate savings, but what you can do is make an informed decision based on the information you've got at the time to have a structure which reduces that risk.
Yep.
So it's a bit of a balance between, the administratively complexity of a structure and, setting up a structure that suits someone's needs. So I wouldn't recommend, splitting the mortgage onto 10 different
Yes.
products, but at the same time, there are other considerations around extra repayments. If you're expecting, an inheritance in a couple of years, you might want to put someone floating so
Yep.
you can pay it off without any penalties.
Yeah.
And each client's different.
Yeah, and so there's some products out there where obviously you've got your amount that you have to pay off.
Yeah.
But for instance, on our mortgage, we are allowed to pay off an extra 20%
Yeah.
on top of if you can afford it.
Yeah. So each bank,
each
yeah,
fortnight.
each bank has a different extra repayment policy. And that's part of my job, is to understand what people want to do, and that is an important consideration. So it's not just the immediate 1 or 2 year fixed rate. It's you look at the lifetime cost of the interest. Something we're looking into at the moment is something called lifetime cash flow modelling. So we can, because we're going to be doing insurance now as well, and investments in the future, is actually is actually analysing someone's sort of wealth over time and catching up every year to check in how people are progressing.
Yeah. So it's not just about getting a mortgage. It's about making a difference in people's lives long term, having that relationship. And I think it's similar to what we've talked about on other episodes on the podcast, is working in with your solicitor, because they can give you benefits, working in with your agent because they can help you find a property that might not be on the market, or working with a broker because they're actually going to save you money long term, not just on this initial purchase. And I think that's maybe something that people don't understand, is that it's, everyone has their doctor, everyone has their dentist or etc. They really do need an agent. They need a broker to form that relationship, because the idea is that you pay off your mortgage faster than that 30 year. That's the goal, and there's different ways of going about it.
Yeah, absolutely. And don't get me wrong, at the moment it is quite tough for people to make extra repayments with a cost of living crisis and things. But if you do have the capacity to make extra repayments, I would absolutely advise people to get in touch with me, or get in touch with the bank to look at that, because it's better to make the extra repayment rather than putting it in a low interest savings account.
And it could be $20 extra is actually going to reduce huge amounts at the end of the loan, isn't it?
Yeah, the power of compounding interest. Yeah.
So on a different tack slightly, right? There's a lot of different mortgage brokers around. There's a lot, to be fair.
Yeah.
In our town especially. It seems like there's an overload. So what makes a good mortgage broker?
Yeah.
Or what makes you one of the better mortgage brokers, and why should people come to see you rather than to go see someone else?
Yeah, good question. I think it's a bit different from the real estate industry, slightly less competitive, even though there's a lot of brokers around. Our main competitor is still people going direct to the banks.
To the bank, yeah.
And so that is the main advantage we have. For me personally, working with clients, I like to think that, having gained a fair bit of experience over the last couple of years, that your knowledge, because we've all got access to the same lenders on the same terms. Yeah. So really, it's your problem-solving skills that are your point of difference, and your sort of range of lending scenarios you have worked on helps. So first home buyers, bridging loans, investment properties, not so many of them in the last 2 years, but that might pick up.
Yes, it will.
Yeah, and non-bank as well. So some brokers do non-bank lending. I haven't done a lot of it.
When you say problem solving, because I know from various people, and I know that there's been people that we've dealt with that have been turned down finance from numerous banks and other mortgage advisors. Yeah. And they've come to you. Yeah. And you've managed to get the deal done. Yeah. So how does that work? Is that you're just clever and you're very good at what you do?
I think it's just understanding the principles of the lending and the way the different banks.
Because it sort of shocks me how I know certain people that struggled to get some money and they wanted to buy the house, and they were very disheartened that they were turned down. Went to a mortgage broker, turned down, and I said to them, "We go and see you." Yeah, and
it's quite a common thing, for particularly for people that have been with a bank for a long time. Yeah, they often hear, "We've never missed a payment. We've been with the bank since we were kids," and then they're not approved for their next home or whatever the situation is. So it's just understanding there's a bit of technical number crunching involved, and I've got a good background in that area. Yeah. And so things like, consolidating debts, looking at discretionary expenditure and forming a household budget so people can manage their bank accounts slightly better day to day. Things like that can make a difference when you submit an application. Yeah.
it still shocks me that people can be turned down by say 4 different identities, and then they can come to you and get approved. It just
does happen. Yeah, I mean it's one of those, and linked to that is bank policies are changing all the time as well. So part of my job is to keep abreast of the latest policies.
So that's what it tells me, is that you're ahead of the game.
Yes.
Yeah, so you're doing well. Here. You can say that I do a good job. You can back yourself.
I mean, there are good brokers in Nelson.
Yeah, there is.
It's just you doing your best, and we've got good relationships with some lenders, and we do a lot of business with them, and so it's understanding some of those unwritten policies at the banks as well.
I know you spoke with us a few months ago. It might have been more than a few months ago. Time flies. In relation to, you changed I think you call it the aggregator.
Yeah, that's
Is
right.
that right? Is that what it's called?
Yeah.
That you use now, and the new aggregator that you're using is a lot more streamlined.
Yeah.
It's faster. It's easier for people to use, easier to understand.
Yeah, so our CRM, we've updated our IT systems essentially.
Yeah.
So it's a lot easier for clients to...
Yeah, I found that too, because obviously we did one recently, and boom, we could do it all from home. Just straight up and it even suck the information from the bank accounts without me having to just a click of a button, pretty much.
Which
so much
people
easier.
out there need to know that, because they might have had an experience, in the past with the company, which may not have been great, but now with the new system and setup, and with you now on board, and running the mortgage side of things, that ultimately things have changed, and now you're a market leading mortgage advisor in our region, and people should be giving you a crack. So if they're looking to buy a home, looking refinance, looking to do anything, they should
family insurance. Yeah,
they should be giving Calum McNeil a call.
It's Calum with 1 L, not 2.
Yeah. Keep the dad jokes.
It's the Scottish spelling, Calum.
Yeah. Far out.
The proper spelling.
At the end of the day, they should be giving you a crack, is what I'm saying.
Yeah, absolutely. Yeah.
From our experience, and from my experience, and Callum's got his own personal experience from just selling and buying. You do a fantastic job. So, look, we'll continue obviously to work together. We would like to thank you for coming on board to the pod today. It'll be the first of many, so don't be shy. You will be back.
You'll be back.
All right. So thanks very much, Cal.
Thanks, guys.
Cheers, mate.